But speaking of China, we have to mention that whole rumor that came in for the 20th time that China has banned cryptocurrencies. They said again today that all business activities related to cryptocurrency are illegal, that they don't allow any exchanges between cryptocurrency, tokens, derivatives, and anything else. And
which was already their policy since 2017, that these are all illegal, and we're going to shut down the exchanges and so on. And they already shut down the miners, and that was supposedly, there was a big move of miners out of China that actually took a couple months to really get the hash rate back up. And that's when we started to see a rally again. Bitcoin is when the hash rate started to really recover, because the miners that were based in China were able to move their mining equipment to a friendly country and start back up. Some of them even moved to the US, believe it or not. And but they got that issue resolved. So it's like the China thing is, in a way, it's been, actually a narrative that's been, it's weighed on crypto for 5-6 years. It was really 2014, the first time that they really made these very aggressive statements against it. But it was much smaller at the time. At the peak in 2013, the entire crypto market was 100 billion in market cap. Now it's close to 2 trillion. And so it's now on the radar of not just governments, but a lot of investors that never considered it a legitimate asset class until it got big enough. I mean, for a couple of reasons. One, they thought it was just like some fad of the moment thing that would fade. But then two, even if they wanted to invest in it, if you're a hedge fund that has, I don't know, maybe not a hedge fund, but you're a money manager that has $50 billion under management, how are you going to put a significant amount of money, even 2%, into a $100 billion market? You'd be you buy 1% of the whole market. I mean, you'd move the prices hugely just by putting 2% in that market. So, but now that it's 2 trillion, money managers that have significant in size can see it. They see it as a legitimate asset class. Well, okay, there's enough liquidity that I can put $1 billion or $2 billion in this over time and not get killed on prices, not move the market in a way that's really adverse to our clients or whatever.
And, right, but crypto couldn't get a break this whole week. It wasn't just China. The whole thing even started with US regulators. When stable coins, according to Gensler, are similar to poker chips at casino gaming tables. I mean, he insists that all exchanges has to be regulated by his agency. Otherwise, a lot of people will get hurt. He also said that I don't think there is long-term viability for 5,000 or 6,000 private forms of money. And he also said stable coins are almost acting like poker chips at the casino right now. We've got a lot of casinos here in the Wild West, and the poker chips is these stable coins at the casino gaming tables.
I mean, this is like right out of Atlas Shrugged. I mean, this accusation of casino capitalism. I mean, it's like reading some left-wing magazine, like in These Times or something that covers economics, and that's all good and well, but you wouldn't expect the so-called market, the people that understand the market, to have this mentality about what really is. I mean, speculation is an essential part of the economy, and to treat it as something nefarious or bad it's ridiculous. I mean, if there were no speculators, how could a farmer take their crops to market? I mean, somebody has to take the other side of the trade, right? And it's a speculator. not a producer. So what's the who's going to take the other side of the trade if you get rid of the speculators? And I mean, and number one and number two is stable coins are the least volatile and least they're the antithesis of volatility. I mean, they are the companies that are doing these, the legit companies, they've got one-to-one dollar deposits in U.S. depositories.
Well, speaking of stablecoins, what do you think about those rumors that Evergrande commercial paper is actually what's backing Tether? Because Tether has allegedly lots of commercial paper instead of just holding dollars. So, and there are rumors that it's Evergrande developer that has.
You know, you've got to look at. I would say on any of these things, you've got to look at what consider the source is what I guess I'd say. There are people that, I mean, there are people that, let's put it this way. I mean, Gary Gensler, this is not just his opinion. It's like FDR said, there are no accidents in politics. It's not like he's just, smart man with an opinion that was put in this position. The purpose of the SEC is not to protect investors. It's not to protect some little guy. It's to protect the banks. It's to protect the giant players in the market. And that's the only reason that regulatory agency exists. If they did not need protection, that agency would go away in a second. Okay. The purpose of the SEC is to protect the big players from the small players, to protect the Goldman Sachs from the Wall Street bets people and from the crypto people. That's the only reason these agencies exist. The only reason that like the FDA really, I mean, in the end, the purpose of the FDA is to protect the pharma companies.
Right, and there are so many of those agencies. I've learned about another agency this week because it wasn't even Gensler. It was Michael Su or whatever. I can't know how to pronounce his name. HSU. He's apparently the acting chief of the office of the Comptroller of the currency.
Right.
And he also said that cryptocurrencies and decentralized finance may be evolving into threats to the financial systems. He said that crypto and DeFi today is on a path that looks similar to CDS in the early 2000s. And the crypto DeFi solutions to problems in the real economy are rare. So it was a full-blown attack on crypto this week.
But yeah, I know. But see, and for all of that, it's down, 5% or 4% for the week, right?
I would say it's very resilient price action. Yes.
Yeah. So I see that as these kind of tests strengthen it, and in the end, and I think that they but these agencies, I mean, they are the comptroller of the currency is there to protect the banks. I mean, that's the purpose of, I mean, what they see, and they would say if they were on this call, protect them from systemic threats, protect the whole financial system. But they don't mean, when they say the financial system, they don't mean whatever money I put in a bank. They mean the bank. They mean the institution. They mean the market. They mean these big institutions that are, in the end, run for the benefit of the super major shareholders, not, somebody with a couple thousand shares of Google or whatever, even though that, that may be a lot of money to most people. It's nothing compared to the major shareholders of Google. And they're to protect Google, the major shareholders of Google, and the banks that are backing up Google, and on and on. Talk about the Fortune 500. That's what these agencies are protecting. And for some smart upstart company like Yearn Finance to come in and provide like a yield aggregation platform where someone can take US dollars, turn it into a USDC or DAI, and then get 9 or 10% interest on it. I mean, that's like, I'm getting like, if I'm getting that, I'm getting like 80 years of interest from compared to what I get in a bank. I'm getting 80 years of interest, from 1 year. Okay. I mean, why would I keep any dollars in a bank? And it's a threat. They're clearly threatened, and they're sending out, if Jamie Dimon and whatever his name, Larry Fink, and so on, they know that they can be easily painted as, these kind of evil figures if they come out and say things. They've run up against that before. So instead, they send out their attack dog, which is the government. That's what they do. I mean, the whole thing, like that you heard a couple months ago, that now you've stopped hearing it because it became a non-issue. But this whole thing about how horrible Bitcoin was and how horrible NFTs were, or whatever, because of all of the energy they consume and how damaging they were to the ESG goals and this and that. I mean, that was a huge narrative that was used against crypto. And where is that in any of the narrative now? Why did that narrative just emerge and then pass into nothing? And these, in the end, I mean, these things like ESG and so on, it's intended to reinforce the power of the giant corporations, not to actually create a greener world or something like that. It's not.
But I mean, it's not just Bitcoin narratives. It's pretty much every narrative. It's all about money and power. Nothing has to do with people, fairness, nothing. It's like Biden this week. He was saying that, all of those bad, wealthy people, how bad are they? And poor people, suffering while you're so rich. We need to do something about it. I'm like, I've been hearing this narrative for the last, I don't even know, 100 years, and your party is in power right now. You have power. Why don't you just pass some tax laws? Instead, you actually want to reduce the SALT tax that was passed by Trump. So it's even the Democrats, they say one thing just to appeal to the people, and then they do the opposite.
Well, I know. Let's see what actually passed. I mean, see if 2 months ago, at the beginning of August, it seemed like this infrastructure bill was just a foregone conclusion, right?
Yep.
And here it's still being debated, and it's still, they can't agree on anything. It's still being debated. Why is that? It's because there are a handful of senators that really do understand some of the cost implications, and maybe the policies are actually not that great themselves, or there will be unintended consequences that we'll have to live with for 20 years, even though we get 1 year of benefit and we have to live with 20 years of consequences. And some of them are smart enough to see that. And that's why it's in this holding pattern, and it's not going anywhere. And I wouldn't be surprised if whatever passes ends up being much, much smaller than what the original proposal was. And
but what's incredible is how resilient the market has been this week, with all of the news you've mentioned about the infrastructure package, the debt ceiling crisis. I think the debt ceiling is another one that everybody is so bored of. Every couple of years we have this debt ceiling crisis. Nobody even pays attention anymore. The Evergrande news, you name it, and the market is still closed up for the week, and just highlights that in a bull market, the wall of worry, etc. And until that changes.
Well, and but I actually I agree definitely, and what I think the illusion is that these that the other thing is that the market gets pushed around by these narratives all the time, and I think that on purpose, by people that want to push it around to their benefit. And I'm not like saying it's a conspiracy or anything like that. If it's a conspiracy, it's right out in the open. There's no like secret conspiracy. I mean, you can see it all the time. Somebody goes on CNBC or Jerome Powell speaks. I mean, whatever he says is carefully calculated to, get a certain result. And Gary Gensler, jawboning down crypto. In a way, I think it's I actually think that he and some of these other people are not as anti-crypto as some people in the crypto space think right now, even though they're very, some people are furious about it. But it's instead a little bit of a deliberate attempt to like hold down the market a bit, keep it from getting manic. And in a way, I'm actually not opposed to that. I think that is a good long-term place to be. And if Bitcoin doesn't shoot to 100,000 in the next couple of months, but instead it slowly plods its way up to 55,000, that to me is really bullish. It's bearish in the longer run if it shoots up to 120,000 and then collapses right back down. I mean, that would be like a repeat of 2017. And I don't think that's good in the long run to have that kind of blow off. So I actually think it's a desire to, just like Alan Greenspan in 1997, talking about irrational exuberance, where it was a deliberate attempt to kind of push the market down. It might have reacted a little bit more than what he thought, but it was an attempt to kind of cool off what he saw as a too hot rally.
Well, I would say a failed attempt, given that we had 2000 shortly after.
Well, and I think that a similar dynamic is at work in the crypto market, that although they really might be completely opposed to stable coins and these other things and the idea of crypto assets in general, but they're so late. They're too late to do anything about it. If they really stopped it, what would happen? Well, you'd have actually a couple million jobs that would just go to Europe and go to Singapore and go to other countries that are crypto friendly. And
unless it's a coordinated assault on crypto worldwide, which I wouldn't necessarily rule out, because it's still a power for them to be lost.
Well, but see, this is the thing, that they can restrain innovation, but in the end they can't stop it. And they're very late in this game. It's a lot further along already in terms of changing people's, and I'm not talking, when I say people's thinking, I don't mean 62-year-old Gary Gensler, but I mean the attitudes of the typical 28-year-old in terms of what you need the government to protect you from buying NFTs on OpenSea, and to tell you that you're being a naughty speculator and that because you don't have $1 million in investable assets or $200,000 plus in annual income or $300,000 between you and your spouse over the past 2 years, that you can't invest in any of these things because you don't qualify as an accredited investor. I mean, the typical Gen Z or millennial sees that as offensive, actually. I want to be protected by the government. And I'm completely on board with them on that.
Well,
but
just to be fair,
I'm not talking about, by the way, like your hardcore anarcho-capitalist or something like that was around in the early days of Bitcoin. I'm talking about people that are much less political and maybe they even think of themselves as progressives politically. But on this issue of like the government regulating their financial behavior, they have a very anti-government
Right. So, like I was saying, while I agree with you on this completely right now, I'm wondering how will their attitude change? And if I were to bet, I would bet that it will change drastically if that bull market in NFTs and crypto and everything ends. So it's all good and well as long as everything is going up. You have your 90% crash in NFT that doesn't recover in the next half a year or a year. And I'm not saying it will happen. I'm just saying that their attitude is very weather related. It's the same thing with their school loans. You know, they had no problem taking their school loans, but now they want the government to bail them out and pay their school loans because
But the government's not going to do that. And I'll tell you why. See, and that's the thing, is that it was a bipartisan package back in 2006 to pass that bankruptcy bill. The bankruptcy, it was even called the bankruptcy reform bill. So it's, you talk about something Randian, or Atlas Shrugged. I mean, it's like bankruptcy reform. Oh, we're going to make it better, right? No, they made student loans non-dischargeable in a bankruptcy. So you get $100,000 of student loans, so you can go to medical school or whatever, and you're never getting rid of that. You're going to pay until you're 60. And so that, they're not just going to turn on a dime.
Right. No, I agree. I was just saying that,
they're not going to be.
I was just saying that millennials wanted to have it both ways. They want freedom but then they also want protection when the freedom doesn't work out too well.
Well,
so that's...
but it's, but see, it's, I don't think, what you'll have as usual in American politics is the worst of both worlds. Mm-hmm. I mean, that any bipartisan agreement brings in the worst ideas of the Republicans and the worst ideas of the Democrats. The Patriot Act, No Child Left Behind, any of the major policy, the wars in Iraq and Afghanistan. I mean, all these were to, like 99 to 1 votes in the Senate and 400 to 10 votes in the House. I mean, they were all huge bipartisan agreement on them.
Yeah, absolutely.
And anything that comes out of Washington in this age, and maybe there's a better age ahead of us that things will be better, but at least in this age, anything that comes out that has bipartisan agreement is going to be horrible. And we're almost anyway. But I guess that with regard to crypto, I think that there's what happened is one. There's two things that happened in August that I think changed things a bit. One, there was, although what ended up going into the text of this bill was a lot more adverse to crypto than what people wanted, it actually provoked a much bigger response politically than what I think anyone in Washington thought. Okay, it provoked a huge public response on the part of people that are interested and invested in this space. One. Two, it's also created a lot of activity in terms of new PACs being created, new other political activism, where, I mean, you've got a lot of lawyers being hired and so on to be effective lobbyists. And so it's mobilized this, because what I think a lot of the projects in the space, I mean, although I'm kind of a little bit black-pilled on this, and I'm talking like, well, if the US doesn't want this, then we'll go somewhere else. Then we'll go to Switzerland or whatever, where they've been very crypto friendly from the beginning, or Singapore, where they welcome these companies. And most of the projects, whether they're based in the US or not, they would say, well, we want the US to be crypto friendly. We are not going to survive, or we're not going to do very well if the US is anti-crypto. And so they want it to be at least crypto neutral jurisdiction. And I think that's where the focus of, that it's not as a combative thing, but it's as a, you probably just don't understand what it is you're trying to regulate, and that's the problem. You're trying to put these kind of old categories on something that where the point is to be decentralized, and it's not to. You don't have a headquarters. You don't have a CEO. You don't have a board of directors. You don't have anybody that could file a 10K form or send out 1099 forms. Who's going to do it?
Right. So with all of this, you don't have necessarily P&L statement. So like I was saying at the last podcast when you weren't here, is that Michael Saylor now has 1 million valuation on Bitcoin. So my question was, how do you put valuation on something which doesn't have all of those above things that you have mentioned? There's no P&L, P&E statement.